Hi everyone, and welcome to Topic 7, Budgeting. This is the first topic within the Management Accounting module. In this topic, we're going to look at a number of different things. We're going to look at the importance or the difference between budgeting and planning. We're going to look at what a budget is and the key steps in the budgeting process, the different types of budgets which exist, and then how they're sort of comprised. So looking at the master budget in a high-level fashion. We won't in this video look at how to prepare a schedule of receipts from accounts receivable and a cash budget, but that will be done in another video. We'll also look at how budgeting is used in planning and control. And also to wrap up, we'll look at some of the behavioral aspects of budgeting, which are actually surprisingly important in what we do here. So strategic planning concerns this much longer term view of things. So, 3, 5, even longer in terms of number of years. Obviously, it's generally carried out by those more senior in the organization, and it deals with much broader issues that companies have to deal with. So whether they be takeovers or mergers, expansion plans, getting rid of a product or a business segment. So, those bigger sort of longer term sort of ideas and objectives that a business has. Now, obviously right at the moment, lots of businesses are not really thinking about the longer term. They're just dealing with the day-to-day because that's all really anyone or a lot of people can focus on. But, we will come through this phase. And as that happens, and as people get more time and energy to be able to start to think about the future, these sort of ideas of where the next 3, 5, 10 years start to take us will become more predominant. Budgeting is a much shorter focus. So it's usually a year. I mean, obviously you can get sort of monthly and quarterly and so on budgets, but it's that yearly focus. So whether it be the next sort of financial year for obvious reasons. And what we end up with is out of this budget is a framework for the period. So we have a sense of, what are the numbers you've got to hit, or if you've got to get your costs down, how do you have to, well, not how do you do it, but, what do you have to get it down to? Or is it just simply, depending on where you are in the organization, that you just don't have the resources anymore? Because as we're seeing in a lot of organizations right at the moment, budgets are being slashed because the cash flow just isn't there. So it's all of these things which you may well have had before are gone. And so that framework you have to operate in has just, right at the moment, has quite radically changed. And then that sets that idea of what is possible going forward. So in more normal times, obviously we're in not quite normal times at this stage, but in more normal times, what budgets do is they operationalize strategy. And so when you think about that, that's actually quite an important thing. So yes, they end up with numbers, and yes, we need to look at how they get calculated and put together and the numbers involved and how you come up with these assumptions. But at their heart, they're very political documents. Now, that's not political necessarily in the kind of government political fashion, although obviously there are government budgets, but it very much sends a signal as to what is important in an organization. And that does happen at, when the federal budget comes out, which would have been around about this time, obviously because of things that are happening in the world around us, it's been pushed back to October. But that very much sends a signal of things that they find important. Not everyone's going to necessarily agree with the things that they do. But then again, every side that comes into power will have that same issue, that there are going to be people that agree and disagree with what their views on things are. But the same happens with businesses. The same happens even in households. Is what do you value? What do you find important? And that gives you the plans that you need to put in place. So at an individual level, are you saving money to go on holiday? Are you saving money for a house or for a car? Once you figure out the parameters that you need to be able to make those things happen, then you can sort of put that into place. So you go, well, how am I going to make this happen? And so that's what really budgets are doing, is they allow you to take that longer term goal and operationalize it. So this sort of planning cycle, now, if you look up from the top, sort of 12 o'clock, so 12 o'clock to 3 o'clock, or certainly 12 o'clock to about 1:30 or so, doesn't necessarily have to happen each and every year in a lot of detail. But looking at, what your vision is, what your mission statement is, what your goals are as a business or as an organization, And then thinking about where the long-term strategies, you wouldn't necessarily reconsider them each year, but you would certainly take them into account. From that, you develop your operating plans, and these may last, more than just a 12-month cycle, but it's, how do you go about the things that you're going to go and do? And then from then it's, well, how does that sort of feature into the sort of financial framework, so that, 4 o'clock or so time, translating strategies into operating plans and into the master budget. As you're moving through, as we're coming into the sort of more evening hours, monitoring performance, both as you're going along. So are you tracking against what you expected to be doing? And then even whether it be happening at the time or certainly at the end. So we're now looking at 9 o'clock. What are the differences between actual and budget? These may be caused by things which went well or went badly within the business. So, what are the variances which have taken place? But they could have been caused by things that arose completely external to the business, but is going to be impacting on it. So coronavirus is obviously a massive external influence, which is affecting budgets all around the world. Was that caused by the business? No. How business reacts to that and kind of what plans and procedures they've got in place can certainly affect how well or how badly they respond to it. And then as we move up to 11 o'clock, there's obviously an evaluation and performance, sort of rewarding performance side of things. So that could be at a divisional level, it could be at an individual level, it could be at a whole organizational level. Like, how do you reward people? Well, how do you even measure performance? And then how do you reward that? So it's already kind of talked about, a budget is a quantitative expression of an entity's plans. And that's a really important thing to stress. So even when you're getting into the detail of, how do you put your budgets together, and, personally having been involved in, not massive organization budgets, but being involved in the budget making process and also reviewing budgets, they can get quite complicated. But at their heart is this idea that they're taking what the organization, the business, the government, whatever it happens to be, it's taking where they want to go and what they want to do and putting it into quantitative terms. Now that's helpful. It's helpful for a whole range of reasons. One, it helps you kind of think about those longer term strategic plans and assess, is this even possible? Like if you've just opened up a small business, a restaurant, well, obviously not right at the moment, but if you've opened up a restaurant and you realize you've only got seats, you can only have 50 covers an evening, and you work out that you would need 100 an evening to break even, probably not the best of ideas to set that business up, or you have to rethink what you're trying to do. So it helps you understand where it's going and even if it's possible. Another benefit from the budget process is it helps you kind of unpack the assumptions and the ideas about what you're actually doing. Because when you look at budgets, the numbers, because they're future looking, are all assumptions. There's a huge amount of assumptions that get built into this. So if done properly, you're never going to get them right. Like, no one can forecast the future properly. And if you could, you wouldn't be listening to me right now. But the idea is, by understanding why you're making the decisions, understanding, well, what feeds into what, looking at the causal effects, it helps you understand what drives behavior, what drives spending, what drives sales. And that will hopefully help you budget better, but also understand your business better. A range of other sort of benefits in there help set targets for managers so they know what they have to do. And for most of us, it is really helpful to have some level of constraint, to actually know what it is that we have to reach and then have a constraint around it, because that helps creativity. It helps us. If you have just completely unlimited amounts of resources, it's actually quite hard to come up with novel ideas to problems, because you just throw money at it, and that's not necessarily a good solution. But by having those known constraints and having things you've got to do, it forces you to become creative and forces you to work out what those ways of solving those problems are. One of the middle ones in there around cash flow trends, obviously there's a major issue for a lot of businesses right at this point in time. Forecasting sales helps you, again, as I said, unpack what's going on. To the extent that sales data and like unpacking what you need to do in terms of sales, then that will help drive, okay, well, how much stock do we need to carry or need to purchase or need to manufacture? And if you need to manufacture it, how much labor do you need to put on? What shift sizes? How many shifts? You don't necessarily want to have overtime because that'll cost more. So, how do you organize all these things? How do these things all fit together? So the steps in the budgeting process: consideration of past performance. Now, past performance doesn't necessarily mean that it's going to be the same next year, but it's a good starting point. And then look at, well, what do you think's changed between this year, or what do you think is going to be different from last year to the coming year? And so you can start to adjust things. Do you think the economic climate is getting worse? Is it getting better? How are people likely, what are people's likely sort of sales incentives in terms of going out and buying things from you? Or, what's happening to the cost of inputs? Once from that, you can start to create initial budget estimates. But then it's really important, this fourth step is get feedback. Budgets should not be, cannot be done in isolation. It can't just be done by the people on the ground because they may not necessarily have the full scope of where everything fits, but also by the same token, it shouldn't be done just from the people at the top because they may not necessarily have a full read on how all of these things work together and what is feasible and what isn't. So communication both up and down is really important here. Into preparation of budgeted reports and sub-reports. So, you might have a high-level budget, and then within that, there may be nested sort of budgets depending on kind of area, geographic, department, whatnot. As you go over time, monitoring performance. So how are you tracking against budget? Now, there may well be seasonal effects in that, so you need to be careful that, it may look like you're doing really well, but that's because, everything is front-end loaded in terms of sales in the year, and the sales over the back half of the year may be always lower. And as needed, sort of make adjustments during the period if things, aren't necessarily going to plan. So there's a large variety of budgets. These are only a small kind of portion of them. And obviously we're not going to go through and make every single potential budget you could do under the sun. But again, they're all forward-looking documents. The sales or fees budget is probably one of the most important ones out there in the sense for most, for-profit businesses, because that is going to be what they're trying to do. They're trying to sell product. They're trying to make revenue. So if you know what your sales budget is going to be or what your expectations on sales are, that should give you a good sense of, I suppose, the parameters of, your cash inflows, what you can spend on things, and then that drives everything else. If you think sales are going to be up substantially, then you need to make sure you have the amount of product that you need to sell it. So you may need to make sure you've got manufacturing sort of capacity in place to be able to do that. Or if you're a retailer, you make sure you get enough product coming in. So have you secured your supply lines? You know when you're going to get product from, how long that's going to take. So, you're talking across all those departments. Operating expenses, just, how you run your business, making sure you've got all the things that you need to be able to do it. And finally, at least in this particular slide, cash. Right at the moment, and we're not necessarily talking the folding stuff because right now, not many people are actually using cash. I think maybe I don't necessarily trust Big Brother, but I try to use cash wherever possible. And in the past 2 months, I've probably used cash in 2 transactions all up. So now, my banks know a lot more about what I spend my money on. Probably not a surprise that it seems to be coffee at the moment, but cash is important for business because without cash, you're not going to be able to pay for things. And so knowledge of what your cash inflows are and what your cash outflows are going to be is a really crucial thing for businesses to forecast to help them understand whether or not there's going to be a shortfall. Obviously, if they've got an extra amount of cash coming in, that's going to be handy for them and they can, look to invest that in some way, shape or form. But certainly knowledge that there is a shortfall of cash is really important. So the master budget, just in terms of preparation, and the thing I want to focus on, you can see there's a whole range. So in the green, operating budgets, you got your sales or your fees, and then your operating expenses budget. Sitting underneath that in the blue, whether it be your financial statements, your cash budget, CapEx, those are all your financial budgets. The thing I want to focus on, because it is, everything else is mechanical in nature and flows through. The thing which is the most important is in the orange at the top. And this is your budget assumptions. Because we are looking into the future, so the assumptions that you make are going to be critical. And these will drive everything else. If you think sales are going to be up 20% and you think price is going to be, you're going to set price at X, that just has to be your sales budget. But that will be, and obviously if you've got multiple different sort of product categories and whatnot, and you'd have different assumptions for all these things. But ultimately it is the assumptions which drive what these budgeted figures look like. And because it's future looking and because we can't, we don't know the future, there is going to be error in them. So you just got to be wary that and aware that that's going to be in there. If you think about government budgets, and I've had, the luck of being able to, some would say luck, some would say misfortune, but I suppose the luck of being able to sit and cover 5 federal budgets, and they're complicated beasts, but at the heart of it is the assumptions and the parameter estimates that Treasury make around the future. What is unemployment going to be? What is GDP growth going to be? What is the oil price going to be? Iron ore prices. What are these assumptions? Because you change those assumptions, that ultimately flows through the system in terms of expected tax take or potentially, payments for Social Security, health, and so on. And that ultimately affects the bottom line. So it's the assumptions which are embedded in the budgets, which are actually the critical thing. In terms of the cash budget, and we won't actually create one here. There will be another video where we have a look at that. So the cash budget is just simply a statement of expected future cash receipts and payments. And look, we've already talked about it to a degree, and it really focuses on this idea of you need to know how much cash is coming in or going out, and when that happens. Certainly in the course of a year, if you know that you're going to be up $100,000 in cash net over the year, that's handy to know. But if a lot of that cash comes in the second half of the year and a lot of the outflows in the first half of the year, you're going to have a problem because there's going to be a shortfall in cash. So how do you identify those periods of time? And how do you work through those expected shortfalls? So those are really, really crucial things to have. So when a cash receipts and payments coming in, for a lot of what we'll do, we'll only kind of get it down to a granular level of about a month. But you can go granular down to the day if you really need to, just to identify when there's going to be problems and when you're flush with cash. And that's super important for businesses to be aware of. Nearly done. Just to finish up with the behavioral aspects of budgeting and planning. So there's 2 big areas we want to talk about here. And again, this is just an entree into this stuff. There is substantial amounts of work both in the text, but also just in, whether it be the professional literature or the research literature on how budgeting works, because budgets do operationalize plans. And so they're not just objective numbers. There's a level of subjectivity in there. And then how do they get used in the management of a business? So one of these things around the behavioral aspects is how do they relate to the style of the budgeting process used by the organization? And by that, it relates to also, I suppose you could say, the management style of the organization. So this crosses over outside of accounting. And so is a organization a little bit more top down? Is it that more authoritarian sort of view of things where it's driven by top line management and they don't really look to engage or get feedback from their staff and from their stakeholders within the business? I should say staff more than stakeholders. Because without that, they may not necessarily, if they're not frontline staff, they may not necessarily know if the budget sort of parameters and estimates that they're building in are realistic. Does it take 10 minutes to make a widget, or does it take 20? Do you think you can really sell 500 units this month, or is that too much? So that feedback and that information flow both up and down the organization is really important. It should be more participatory. A lot of the research evidence would point to that being a much more beneficial way of doing things. That being said, ultimately decisions need to be made. So you don't want to have too many people it's hard to manage and hard to lead by consensus, but you do need to have people coming along with you in that journey. If you left it down to kind of frontline staff to be able to manage the processes and the targets and, their estimated costs and whatnot, you could see gaming of the system happening. Because if you're saying to someone you're going to get rewarded on hitting certain targets, that may incentivize people to lower those expected targets if they know they can meet them quite easily, so they can get rewarded. So you can't just have it done from the top. You just can't have it done from the bottom. And there needs to be attention in there, but there does need to be feedback going both ways. The other part of it is it relates to the impact of the budget targets and plans on the behavior, motivation, and decision making of the manager. I would actually say even not just the manager, I would say pretty much anyone. And what we're getting at here is this idea of kind of budget stretch. How aspirational are the targets? Like, how possible is it to actually do the thing you're expected to be doing, or hit those particular targets? So if I went out, I haven't done so for a little while, because I've had an operation on my ankle, so road running has not really been a thing I've done for in a proper way for a few years. But if you went out and told me to, you'd pay me $1 million to run a 2-hour marathon, I wouldn't even bother getting out of bed to try that, because I just know that target it doesn't matter. It could be $10 million. It could be $100 million. Doesn't matter. There is just zero chance of me doing that. It's just not going to happen. Even if I wasn't injured, it just wouldn't happen. That's not something I'm able to do. So yes, you put a target in place, and yes, it's well rewarded, but it's just not going to be something I'm going to be able to manage. If you said, well, we'll give you a reward if you can do it in 10 hours. That I'm pretty sure I could do. And I wouldn't even necessarily have to train all that hard to do it. I wouldn't say you could walk it, but it wouldn't be an overly difficult thing to do. So again, you put in a target, you put in incentive, but you're not really going to get you're not really going to motivate people to work that hard to make that happen, because it's a little bit too easy. So it's finding that sweet spot around how do you set a target which is not a walk in the park, but is something people believe that they can do. And, they can see it is possible to do, and people have, hit those sort of targets before. So that does motivate them to, get up in the morning and try their best at this. And so that's then getting more that psychology of, behavior and motivation. And those are going to be slightly different things for different people. So knowing your teams, knowing the people you're working with and, that work for you is going to be a really important part of that sort of whole system. And on that note, that brings us to the end. So in this particular video, on this particular topic, we introduced this idea of what strategic planning is and how that relates to budgetary processes. Just very briefly touched on the fact that the master budget is a set of interrelated budgets and how it's classified into operating and financial budgets. But the key thing in the master budget, which isn't up on this slide, but it's very much needs to be made, it's the assumptions within the budgets which are critical. And finally, the behavioral aspects of budgeting are hugely important and should not be overlooked.